Hello everyone, welcome back to Money Gist Top 5. I'm Uluyemisi Dada. Central Bank Governor Olayemi Cardoso at the CBN Annual Bankers Dinner on Friday said Nigeria's economic reforms are finally gaining traction. Inflation has fallen sharply from over 34% late last year to just above 16% in October this year. The Naira is more stable, the FX backlog has been cleared, and the gap between official and parallel rates is now under 2%, a major turnaround from the 60% gap just a year ago. It said foreign capital inflows have surged to nearly $21 billion this year, 4 times more than 2023, while reserves are at a 7-year high of $46.7 billion. GDP growth hit 4.23 in Q2, driven by tech, finance, and oil recovery. Rating agencies are taking notice with upgrades from Fitch, Moody's, and Standard & Poor's, and Nigeria's recently pulled off its biggest Eurobond issuance ever, attracting $13 billion in orders. On the banking sector, Cardoso assured that the banks remain resilient, recapitalisation is on track, and digital payments continue to expand, with millions of new users and stronger cybersecurity rules. With reforms now rooted in transparency and discipline, the central bank says Nigeria is more resilient than at any point in recent years and poised for sustained stability and growth heading into 2026.
With oil now a smaller share of GDP and fiscal revenue, a sharp oil price decline will be cushioned by the flexible FX regime, rising non-oil exports, and growing services trade. In short, Nigeria is more resilient to external shocks today than at any point in our recent history. My promise to you is that the Central Bank of Nigeria will continue to steer monetary policy with discipline, anchored firmly to its core mandate of price stability. Stability remains the bedrock upon which investment flourishes. Resources are allocated efficiently, and purchasing power is protected. In 2026, we will deepen engagement with stakeholders, strengthen collaboration with other regulators and international partners, and foster responsible innovation across the financial system. We will continue to provide forward guidance, protect the integrity of our financial markets, leverage technology and AI to improve decision-making, and build institutional capacity to support an evolving and resilient financial system.
The Central Bank of Nigeria has issued a sweeping revision of its cash-related policies, announcing new limits on withdrawals and removing some long-standing rules as part of efforts to cut the rising cost of cash management and improve security across the financial system. In a circular released on Tuesday, the CBN said the changes, effective first day of the new year 2026, are designed to reflect present-day realities and reduce Nigeria's heavy dependence on physical cash while pushing wider adoption of electronic payments. One of the major changes is the complete removal of the cumulative deposit limit and the scrapping of excess deposit fees, meaning customers can now make unlimited deposits without penalty. However, new weekly withdrawal caps have been introduced. Individuals will now be limited to 500,000 naira per week, while corporate organizations can withdraw up to 5 million naira per week across all channels, ATMs, banking halls, and POS terminals. Any withdrawals above this limit will attract excess cash charges of 3% for individuals and 5% for corporates, with the fees shared between the CBN and financial institutions. The CBN also ended the special monthly approvals that previously allowed individuals to withdraw up to 5 billion naira and corporates 10 million naira on an exceptional basis. On ATM use, customers will be able to withdraw up to 100,000 naira per day, subject to the same weekly cap of 500,000 naira. Banks are now allowed to load all denominations in ATMs, a move expected to ease transaction pressures. The limit on third-party check encashment remains at 100,000 naira, and such transactions also count towards the weekly withdrawal limit. Under the revised framework, banks must file monthly returns to the CBN detailing withdrawals above the approved limits and total deposits. They are also required to create separate internal ledgers to keep track of withdrawals-related charges. The circular lists specific exemptions, including accounts belonging to the federal, state, and local governments, as well as microfinance and primary mortgage banks when transacting with commercial and non-interest banks. But embassies, diplomatic missions, and aid donor agencies will no longer enjoy previously granted exemptions. The CBN says the new rules streamline previous policies and update Nigeria's cash management framework as digital payments continue to grow. The Central Bank of Nigeria is introducing new rules to curb the surge in digital banking fraud. Under the draft guidelines released on Wednesday, customers must now report app fraud, which stands for authorized push payment fraud, within 72 hours, while banks and fintechs must investigate and issue refunds within 16 working days. This comes as fraud losses in Nigeria jumped 603% to 3.29 billion naira in first quarter of this year, according to FITC data. Banks are required to acknowledge reports within 24 hours, begin investigations immediately, and conclude them within 14 working days. Refunds must follow within 48 hours. Where banks fail to detect fraud due to weak controls, they will bear the cost. If no one is at fault, institutions will split the refund. App fraud involves tricking customers, often through WhatsApp, SMS, and email, into authorizing payments to criminals. CBN says the new rules will enforce stronger monitoring systems, real-time alerts, and 24/7 fraud reporting channels. The draft guideline is open for public comment for 3 weeks before it becomes official policy. Nigeria's economy recorded a moderate uplift in the third quarter of this year, with fresh data from the National Bureau of Statistics showing a year-on-year growth of 3.98%, slightly higher than the 3.86% posted in the same period last year. According to the NBS GDP report released on Monday, aggregate real GDP rose 57.03 trillion naira, up from 54.85 trillion naira in quarter 3 last year. In nominal terms, output surged by 18.12% to 113.59 trillion naira. The services sector remained the dominant driver of economic activity, contributing 53.02%, followed by agriculture with 31.21%, bolstered by stronger crop production. The oil sector grew by 5.84% year-on-year, supported by a rise in average crude oil production to 1.64 million barrels per day, although output slipped when compared to the previous quarter. All contributed 3.44% to real GDP. The non-oil economy maintained steady momentum, expanding by 3.91%, outperforming both last year's figure and the second quarter of this year. Agriculture recorded a stronger performance with 3.79% growth, while manufacturing cooled to 1.2% in the midst of subdued nominal expansion. Construction grew by 5.57%, and trade improved modestly to 1.98%. Information and communication services continue to shine, posting a 5.78% rise and contributing 9.10% to real GDP. Real estate delivered the most dramatic nominal jump, up 89.34%, though real growth stood at 3.5%. Financial and insurance institutions delivered one of the strongest real performances at 19.63%, despite a lower contribution to overall GDP. The Statistician General, Adeyemi Adeniro, noted that the results reflect enhanced data quality and improved sector coverage under the rebased National Account Framework. This report comes shortly after the International Monetary Fund revised Nigeria's 2025 growth outlook upward to 3.9%, citing higher oil output, improved investor sentiment, and a more supportive fiscal environment. The NBS GDP numbers show that while Nigeria continues to post positive growth, sectoral performance remains uneven, highlighting both opportunities and lingering structural challenges. Nigeria is targeting $10 billion in new investment and unlocking up to 2 billion barrels of crude reserves as the federal government launches the Nigeria 2025 petroleum licensing round. Unveiling the program in Abuja, the chief executive of the Nigerian Upstream Petroleum Regulatory Commission, Gbenga Komolafe, said 50 oil and gas blocks across onshore, shallow water, frontier and deep water terrains are now open for bidding. He said the initiatives aims to reverse declining exploration, expand reserves, and boost national output by up to 400,000 barrels per day when the assets become fully operational. Komolafe noted that the 6-month exercise will follow a 2-stage, fully digital bidding process guided by the Petroleum Industry Act. Only companies with proven technical and financial capacity will scale through. He added that the 2025 round builds on the massive success of the 2024 exercise, which recorded strong investor compliance and 0 petitions. The Commission has also introduced a bid guarantee requirement to ensure only credible investors emerge, ending the era of inflated signature bonuses that never materialize. Nigeria is intensifying global roadshows to attract new capital, especially as the global energy landscape becomes more competitive. All guidelines, maps, schedules, and asset teasers are now available on the NUPRC licensing portal. That's your Money Gist Top 5 for today. I'm Oluyemi Dada. Drop your comments below. Like, subscribe, and switch on your notification bell to stay updated with economic and financial stories shaping the flow of money in Nigeria. See you in the next video.